Hi there, welcome to kneppyinvests and welcome to another technical update video. It is November 10, 2024. Current time in Brisbane is 1 p.m. and I'm feeling it. I'm sweating. So fairly humid today in Brisbane, warm and humid. And those sort of days you tend to sweat a little bit more and also increasing chances of a storm. So hopefully we'll get a storm later today or overnight. Now the agenda for me over the next week, I think I might talk about that right now because I'm quite busy. Not only am I in between two night shifts, so I'll be working tonight. I'm also moving stuff around because the painters are coming in over the next few days to paint the downstairs portion of the house. Now, I do have two dogs, for those who don't know, and I want or don't want the dogs to be annoying to the painters, so I've decided to take the dogs away for the next 4 days, which means after my night shift, I'll be driving 6 hours south to a little town on the mid-north coast of New South Wales called Harrington. And because I'll be driving after a night shift, I might be a little bit fatigued. So I'll be making plenty of stops down along the trip. I've done this a few times in the past. And as long as I do make quite a few stops, and I'm talking about every 30 minutes to an hour, I should be fine. But because I will be away from my home over the next 4 days, I'll be recording videos from my parents' house. And there's a chance tomorrow's ASX Daily Rundown video will be a little bit late. And there's also a chance this video will be a little bit short because I actually have no plans of doing any standalone companies or any individual companies in today's video. Wait to see how or what I do. So after today, the next 4 days, Monday, Tuesday, Wednesday, Thursday, all those videos I'll record at my parents' house. And I also plan to do a few standalone videos. So wait out for those. Hopefully I'll have a little bit more time down there. I should have a lot more time. And by the time I get back on a Friday, the painters should be completely finished. That's the plan anyway. And well, I should say that's their plan anyway. Doesn't mean the house is going to be doesn't mean there's going to be no one in the house. I do have my ex-partner still living here. Anyway, so that's the plan for the next week. Now, the agenda for today's video is fairly similar than other videos, except that individual company portion. I'm not sure what I'm going to do there just yet. So have a look at indices, commodities, Bitcoin, Ethereum, bonds, and currency. So let's get stuck into it because a pretty good week when it comes to indices, particularly United States. And I have a feeling, I haven't checked yet, but I have a feeling Dow Jones and NASDAQ are probably at all-time highs. So S&P 500 is probably as well. Don't think the Russell 2000 is because that's well short of its all-time highs. But let's turn our attention to the ASX. And after the election in the United States, a pretty good run. And one of the reasons why we've seen a pretty good run in equity markets is because more certainty. The market hates uncertainty. The market hates increased risk. And the market just did not know who was going to be in power. Now they know. So a little bit more certainty according to the markets. Now, some people might argue a little bit more uncertainty because we just don't know what Trump is going to do. But the market does like certainty. So few good days for the ASX. In fact, for the week, XJO was up 2.2% and the XSO was up 1%, which is interesting because I'm pretty sure the Russell 2000, which is a small cap index in America, was up significantly, had a pretty good week. Now back to the XJO. So I've been, tracking the XJO against the top of the trading range for about a month. And again, today or on Friday, it went above the top of the trading range. So pretty good week. And right now, and not only that, if you go back last week, if you remember, I think it was the Thursday session, the XJO bounced off 8,100. And then we now have seen a rally towards 8,400, which is the hold high. So I'd love to see the XGO within the next few weeks get above 8,400 to get to new all-time highs. But if you just look at this daily chart for the XGO, 2024 has been a pretty good year for equities in Australia. So that's not only true for the larger caps, the ASX 200, it's also true for the small caps. Not quite as good, I suppose. It's probably a better word than good. Not quite as, in fact, I'm pretty sure if you look at a yearly chart, does this start from the start of the year? So the XSO is up 8.2% and the XJO is up 9.3%. In fact, funny enough, if you have a look at the yearly chart, so on occasion you will see down years, but look at that. Over the last 40 odd years, the XGO has gone from 400 to 8,295. That's why we are equity investors. That's why we invest in stock market, because of this very thing. Anyway, let's go back to, and by the way, the whole reason I went to the 12-month chart is just to show you that the XGO has had a better year than the XSO, but not massively different, slightly higher. Anyway, let's go back to the daily chart for the XSO, which is not, I suppose it's similar to the XJO, but not quite as, not quite as good. I'm just trying to find a different word for good. Now, pretty good day on Friday's session, but we did see the XSO actually push back into a nice little support zone, and just shy of a support price, which was around about 3,090, and it has rallied off that. But again, just like the XSO, I'd like to see the XSO go on another nice little rally over the next few weeks to get to long-term highs, not all-time highs, because the XSO all-time high is still back in 2017, not 2017, 2006 or 7. If you don't believe me, let's have a look at the weekly chart. XSO weekly high 2007. I wasn't sure if it was 2006. Yeah, 2007 makes more sense than 2006. Anyway, so that's the Australian indices, and to be honest with you, there's no complaints from me. I am not bearish. The only reason I might be bearish is just because the XGO is just above the top of the trading range. That's the only reason I might be a little bit bearish. Now onto the American equities, and because of the increased certainty when it comes to politics over there, or the political scene over there, we have seen a really good week. In fact, if we look at the weekly chart for both the NDQ and Dow Jones, the NASDAQ up 4.6% for the week and has achieved all-time highs. And what's the other one? Oh, was that Dow Jones I just showed you? So Dow Jones up 4.6 and NASDAQ up 5.4. Both of those at all-time highs. In fact, the NASDAQ, if we look at the daily chart, has broken out. So there was a nice little line here. I suppose nice little line is not the best words either. So that's sort of connecting the old highs the NASDAQ saw back in July. And we needed to see the NASDAQ get above that. And we saw that during the week, again on the back of the election. So the NASDAQ all-time highs, Dow Jones at all-time highs. A really good day on Wednesday. It was up, what was it? Up 3.57%, and it has reached all-time highs after a little bit of a pullback, which is okay. That was sort of a buy the dip situation for the Dow Jones. And again, pretty good looking chart. So both of these charts look good. In fact, I still prefer the Dow Jones over the NASDAQ, but you can't go wrong with either one at this point in time. And the Russell 2000, which is a little bit different than the XSO, because a lot more bullishness in this particular indice. So small caps have rallied a lot. In fact, this was an absolutely brilliant week. The Russell 2000 up 8.6%. Yes, 8.6% for the week. Not only that, it has broken out. So I've been tracking the Russell 2000, and I've been wanting it to get above this purple box, which was a nice little resistance. Keep saying nice little or nice, and it's a resistance zone, and it had been having trouble getting above that zone for about 4 months, and finally on Wednesday it broke through that with ease. In fact, on that particular day, up 5.84%. So this chart actually looks pretty good. So small caps are humming along in the United States. Okay, so that's the American indices again. Probably a little bit more bullish, looking a little bit better than the Australian indices, but you can't go wrong with either one. And that's one of the reasons why I've heavily, maybe not heavily, but I have invested quite a bit of my money into American companies, because I want to capture some of the best companies in the world. And that's why a lot of times when you look at the indices in America, they're just so much better than the Australian indices. And there's a reason behind that. The biggest companies in Australia are crappy companies that aren't growing, and mining companies. Anyway, now let's have a look at some international indices, starting with the Nikkei. How did this go through the week? It was up 3.8%. Sort of going sideways, bit of volatility in there over the past, say, 3 or 4 months. Got to an all-time high back in when was that? When did it get all-time high? Got an all-time high back in July. Or was that June? And then we've seen that big in August, that big, what was it called? Yen carry trade. It dropped a lot, fair bit of volatility. It hasn't quite recovered back to pre-yen carry trade levels, but it's getting there, slowly getting there. So still, if you look at the weekly chart for the Nikkei, it's still looking pretty good. Hang Seng. So I suppose a lot of people thought maybe there would be a little bit more downside when it comes to Hong Kong, China, because of the threat of tariffs, increasing tariffs on on Chinese companies. But we didn't really see that. In fact, Hang Seng for the week was up 1.1%. And I have a feeling some of that bullishness was because of the possibility of some more stimulus from the Chinese government. And I remember looking at this one last week and thinking, it looks pretty good. And I'm still at that point. It's still looking pretty good. If I saw a company's chart look like this, I'd be almost keen to buy in. Now onto DAX. DAX looks pretty good as well. And we will look at one indice that does look good. Looks actually fairly bearish at this point in time. I'm not sure what's happening there with the FTSE. But anyway, DAX flat. So the Germans don't really care about the American election. That's what I see here. In fact, down slightly, 0.21% for the week. And if you have a look at the daily, yeah, nothing much happened, up and down during the last 4 trading days. Then on to the FTSE. I saw this weekly chart for this one. I was like, oh, what's happening here? So it has turned slightly negative over the past few weeks, down to 8,072. Now, I got down to 8,700, or close to 8,072 back on the 31st of August or October. And during that yen carry trade, it got down to these levels as well. But just looking at this daily chart for the FTSE, it's going sideways, a little bit of weakness, short-term weakness. But if we see further weakness, that would be fairly bullish, or bearish, not bullish, bearish for the FTSE. And if you have a look at the weekly chart, yeah, nothing much happening with FTSE. It's just slowly going up. Okay, so that's the indices throughout the world. Now let's turn our attention to some commodities. And a pretty interesting week when it comes to some of these commodities, including some of the companies who are mining these commodities, like gold companies and silver companies, iron ore companies, those sort of things. So let's turn attention to gold. In fact, gold did have a down week. Yeah, gold had a down week. So down 1.9%. Not a lot, but it's still a down week. But the weekly chart still looks pretty good. Even the daily chart looks good. So even though there was a little bit of a pullback, it still looked pretty good. It's still in an uptrend. No reason to sell all your gold stocks right now, unless you become a little bit more bearish about the future of gold. Maybe Trump is going to be negative for gold or silver. I have heard that a few people say that. However, I've also heard a few people say or Trump is going to be quite positive to commodities. And they're talking about oil because, he's very positive, not positive oil. He's an oil, I wouldn't say oil bug, but he wants America to produce produce more oil. But if that happens, shouldn't oil prices, supply goes up, so oil prices should go down. I was actually thinking that when this person was talking, why they're bullish oil. But anyway, gold looks pretty good, still looks good, even though it has pulled back. So I think this week is going to be very important. If we see gold moving back up again, that would probably confirm to me that this was just a little bit of a pullback. But if we see gold starting to fall back towards 2,500, maybe the uptrend has come to an end, or maybe gold is moving into a consolidation phase or period. Silver also had a fairly negative week. In fact, this is a little bit more bearish because down 3.8% for the week. But on the, was it Wednesday session? So on Wednesday, it was down 4.4% and actually broke through a support level. So that support level was only a support level for a very brief period of time. It was resistance, became support for a brief period of time, and it was looking fairly bullish for silver, and now it has pulled back. In fact, silver has seen quite a few big down days over the past month. So we're talking about big down day on the 23rd of October, 31st of October, and then again on the 6th of November. So we're talking about a Wednesday, a Thursday, and a Wednesday. So obviously silver does not like the midweek. Silver prefers the start of the week or the end of the week. So it likes Mondays and Fridays. Anyway, so a little bit less bullish when it comes to silver. So still there with gold, but this has been a negative week for silver. Now on to copper. Yeah, why not? Let's have a look at copper. Probably should always look at gold, silver, and copper in a row. Looking at copper, down 2.8%. A lot of volatility in copper. Just doesn't know. The world doesn't know what's happening. I always look at copper as sort of a proxy for what the market is thinking, the commodity market is thinking about the economies around the world, particularly when it comes to the United States. And right now, it just doesn't know. 3 really big volatile days. Down 5% on Wednesday, up 4.4% on Thursday, down 2.8% on Friday. So maybe the volatility is becoming lower, but still highly volatile the last 3 days. You can just see that by the daily chart. And because of that, I'm neither bullish, I suppose I was say neither bullish nor bearish. That means I'm neutral. So I'd say that I'm neutral when it comes to copper right now, just by looking at this daily chart. I could imagine it going either way. Now onto iron ore. This is another one where if anything, I'm a little bit more bearish. There was that nice little run up in iron ore when the talk of Chinese stimulus was coming through. You see that back towards this end of September, really good run up, but didn't really change the trend. And we have seen iron ore pull back a little bit. So if anything, iron ore is still in a downtrend or at the best going sideways. Definitely not an uptrend when it comes to iron ore. I'm just seeing a lot of reds here. Uranium. So uranium, my thoughts on uranium have turned quite significantly over the last few weeks. So I was being a little bit more optimistic about uranium back towards the middle of October. It looked like it was trying to move into an uptrend, and over the last 3 or so weeks, uranium has fallen. So this is a spot physical uranium, and it's dropped a fair bit. And it is moving towards the lows uranium saw back in the start of September. So if it breaks through that, that would be quite negative. So if you have a look at any uranium companies on the ASX, they're going to have a fairly similar chart, not completely, because there will be some company-specific things that might drive the share price higher or lower. So for instance, if we look at Boss Energy, it's going to be fairly similar to that. Yeah, fairly similar. Not identical, but fairly similar. And for instance, Palladium Energy did release something negative, if I remember, in the last 2 weeks. So this is a little bit different. And that negative thing was Monday, 28th of October. But still, it looks like uranium. So again, this should show everyone that it's not about the individual companies, it's about the underlying commodity. So are you bearish, bullish about the underlying commodity? In this case, uranium. If you're very bearish, then why would you have any uranium companies in your stocks? But if you're very bullish uranium, then I think the next question would be, do you go ETFs? Do you go individual companies? And then what individual companies? And even what individual companies can be important, even though I've mentioned that a lot of these companies' charts look fairly similar than uranium. Not all of them do. For instance, Peninsula Energy looks completely different. And this one, I'm pretty sure they have a project in Wyoming, if I remember correctly. So this one always intrigues me because they have a project in Wyoming. In fact, it might be one of the largest uranium projects in the United States. I could be wrong about that. But yeah, if you put your money in Peninsula Energy because you're bullish on uranium a few years ago, you've seen your capital go backwards. So even though I've mentioned that the individual companies' charts mirror the underlying commodity, not always the case. Okay, oil, another one down 2.4%. Interesting. Another one where I look at the chart and I'm if anything, I'm slightly bearish, but even then, I'd say that part of slightly bearish is slightly to the extreme, which means very smallly bearish. If anything, I think oil's going to go sideways. But again, if Trump gets his way and a lot more supply of oil on the markets, then there's a chance oil could drop. And I suppose the American public would love him for that. Yeah. Maybe he does have his pulse on the heartbeat of America. Natural gas, I'm pretty sure that's, yep. And lithium, lithium up 2.96%. Lithium had a pretty good week, looks like. So lithium was up 5.62% for the week. Still dropping though, but at least it was up for the week. I'm still trying to find a really good lithium chart. I haven't found it yet. Coal's always intrigued me here. This is the Newcastle Coal Futures, and it really has been trying to get into an uptrend. And then let's have a look at some of the other commodities. We have tin. How's tin going? Sideways. Nickel. Nickel had a good week, looks like, maybe. Nickel was up 2.4% for the week. Palladium Ooh, Palladium had a bad week. Ooh, 2 bad weeks in a row for Palladium. Ooh, look at that. So it looks like there was a breakout for Palladium, and I think that breakout has failed. It's pulled back significantly. In fact, what's that? 6 down, or was that 7? 7 down days in a row for Palladium. So this was a chart that looked pretty good, was looking good. If I saw this chart for an individual company, I would be, ooh, this is looking pretty good. Uh, but it just shows you, even though a chart could look good, the future is unwritten. And who knows what's going to happen in the future. So Palladium has turned a little bit negative. Now, doesn't mean it's going to continue to fall, because I just saw, if we could just connect these lows, oh, it needs to bounce. It needs to bounce right now. So there is possible an uptrend developing, but it needs to bounce. Needs to bounce. Coco will skip by that. Okay, let's turn attention to crypto. And we're talking about a really good week for the indices around the world, apart from maybe FTSE, DAX down a little bit as well. Really good week for crypto. I did read something where someone was mentioning there is not one single crypto person who is not pro-Trump. And that's probably why when Trump, in fact, all you had to do on Wednesday here, local time, all you had to do is look at Bitcoin. And that's all I did. I had a look at Bitcoin and I knew straight away who was going to win the presidency. And this is Bitcoin. It has broken out. So Bitcoin is the chart of the week, I think. Not only really good day on the Wednesday session, up 9%, it's continued the next 4 days. It's going up. So this just shows you there's a lot of strength with Bitcoin. And not only that, when it broke out, massive volume came on that day. We're talking about the biggest volume day or equal biggest volume day we've had, or this particular asset has had for the last 7 months. So a really good day for Bitcoin. And this chart looks amazing, amazing. And Ethereum, not quite the same for Ethereum, because Ethereum was going sideways and wasn't, although you could say this is a breakout, not quite as bullish as when it comes to Ethereum as, wait, I don't know if actually I do that. I could just extend this across. It has broken out. It has got to like a 4-month high, actually 3-month high. So it's like, it's not quite Bitcoin, which is at a long-term high. So if you have a look at Bitcoin, we're talking about the last time Bitcoin was at these levels, is it never? Yeah, this is all-time high for Bitcoin. But Ethereum is not at that level, only a 4-month high or 3-month high for Bitcoin, and still well short of its highs. So that just shows you that there's a little bit more strength in Bitcoin than Ethereum. But still a really good week for Ethereum. In fact, Ethereum might have had a better week than Bitcoin. Up 28%. What was Bitcoin up? Bitcoin, did I look at that? Bitcoin up 12.6%. So a little bit more bullishness when it comes to Ethereum in terms of the week. But when you look at the whole chart, the daily chart, it is breaking out, but only a 3-month high. So probably more bullish when it comes to Bitcoin, just because it's a long-term high. Not a long-term high, it's an all-time high. And I do prefer all-time highs than a 3-month high, because it's still a little bit of resistance, but a really good week for this particular crypto. Now onto bonds. This is interesting. Bonds going up. And I think one of the reasons why bonds have been going up is because they were pricing in a Trump victory. Pricing in a Trump victory, increasing tariffs, a possible new wave of inflation, because increasing tariffs would mean people paying higher prices for products, not only international products or foreign products, but also domestic products. And that could lead to another wave of inflation in the United States. And I think that's what happened with the bond market. They just pricing in Trump victory. And then when Trump got in, bond yields, on Wednesday, up 4%. They have pulled back the last 2 days, which is interesting. So maybe I haven't to be honest with you, I don't really follow American politics. I don't really follow Australian politics all that much. I do on occasion read what they have to say, which is important. But typically when I read what they say, I'm disappointed. For instance, this whole social media ban for under 16s, it's ridiculous. There's bigger problems out there than a social media ban for under 16s. And because the way I look at it, a gnat that is 1 minute old has more tech savvy than these boomers who are in charge. And under 16-year-olds will find a way to get around it. I'm pretty sure that's going to happen. And I don't think it's going to work. I think it's going to be a complete failure. And in fact, I think it's going to cause more harm than good. Anyway, that's just my opinion. I could be completely wrong, but that's my opinion. And also, I hate nanny states. I really hate nanny states. Really, really hate it. Less nannying, please, governments. Anyway, and let's have a look at the currency. Oh, a lot of volatility with the currency. Yeah, just like what was it? Yeah, copper. No one knows what's happening with copper. Copper up and down. Australian currency is also up and down a fair bit over the last few days. So I was asked about this by a colleague, what I think about the Australian dollar, and I went, I have no idea. I could sort of see if inflation starts increasing over there, interest rates start rising, we start decreasing interest rates, then our dollar should drop. But this just shows you that people just don't know. We just don't know. The currency market doesn't know. We don't know. It's just up in the air at the moment. Okay, so that's the end of this part of the video. Now, do I want to do individual companies? Now, I have not any plan. So what I'm going to do is just have a look at my technical portfolio. We'll go through some of the companies, and I'll also show you sort of like a introduction to what I'm looking at when it comes to using stop losses or using an array of different stop losses and trailing stop losses to give me an indication to sell, a sell signal, that sort of thing. So I'm starting to use 3 sell signals or stop losses, if that makes sense. One of them is a simple subjective a support resistance level. So in this case, a support level. If the share price breaks below that, that could be a sell signal. Another one I'm using is a 200. I was using a 200-day moving average. I've now increased that to a 100-day moving average. I sort of like that moving average. So if you see the share price drop below the 100-day moving average, that could be a sell signal. And I'm also using a percentage stop. So for instance, if the share, this is Life 360. So I've included all 3 sell signals on this. So the horizontal line is also always going to be, which is in orange here, is sort of my support level. So for Life 360, that's about $20. The blue line that's sort of jagging up. Actually, no, the black line is the 100-day moving average. You just see going up, gradually going up. And the other one is a percentage stop. So with the percentage stop, I've set it at 20%. What does that mean? So whenever you see a company's share price get to a new all-time high, you're going to see this particular stop loss rise. So what it's measuring is 20%. So if the share price falls 20% from the most recent high, that's a sell signal. So that's why here, for instance, in May, share price of Life 360 got to an all-time high. And you can see this blue line just goes sideways until the next all-time high, and it slowly goes up. So I'd like using all 3. Now, I haven't figured out just yet how to incorporate all 3 into a decision-making process, but sometimes it's easy. For instance, Life 360, you can see it here. Or the share price of Life 360 right now is well above all 3 of these signals. So there's no sell signal, not even close to a sell signal. So I don't even have to worry about Life 360. AMP, I'm still like, wow, I am trading. I actually own AMP right now. That's life altering. A company I have always thought as one of the worst quality companies on the ASX. I am trading this company. And at this point in time, I'm actually doing fairly well. It's up almost 20% from my position. So in this case, the share price is well above all 3. In fact, all 3 sell signals are almost in the same price, between about $1.30 and $1.26. So that's obvious. If the share price falls sort of below all 3, that's a sell. And that bottom of my all 3 signals is my support level, which is at $1.26. So I'll keep on going on. I'm going to find one where the share price is now. I'm going to show you Nuix now. This is really interesting, because one thing I found is that 20% stock drop, or I'm not sure what they call it here. The actual indice is called, I'll show you about this script. This is it. Trailing percentage stop by Kervank Osbilic. Anyway, so that's what it's called. And one thing I've found is when you do see a fairly, a quickly moving company in terms of share price, that stop loss could be triggered because it's too low, 20%. You might need 25% or 30%. Now, we haven't seen that with Nuix just yet, but I haven't seen with other companies. When the share price rallies very quickly, that might be triggered a little bit more. So this is one of the reasons why I like to use all three, because you can see this particular line, this 20% stop loss, is well above the 100-day moving average and also well above my stop loss, sort of my resistance or support level, which is at about $5. And the reason behind that is Nuix is just, share price is increasing at a fairly quick rate. I think Zip's like that as well, but small companies are definitely like that. I'm trying to find one or remember one that's like that. Maybe SKS was like that. Maybe not. Well, it's not anymore, but it was. What else? Zip, definitely like that. No, actually, Zip is a little bit more orderly. I actually do like this chart. It's really orderly. And you just see the share price remaining above all three levels. It sort of went below back in April. In fact, I wasn't trading Zip at this point because the share price was going sideways. I was waiting for another signal. Anyway, I'm trying to find, maybe DeLorean is one. Yeah, here's one, DeLorean. This is a good one. So 20% stop loss is a little bit too low for a company like this. It's a small company. Share price is quite volatile. You can see the share price drop or rise 10% in one day. So the reason, there's one slight negative about the percentage stop loss, or stop, whatever they call it. And one of the things I'm looking at is ATR. I haven't found an ATR in TradingView that I do like. And one of the things about ATR, what's it called? True range. Something ATR is true range. ATR trading, average true range. Yeah, average true range. One of the things I like about this is it's a volatility indices. So it takes into account volatility, but I haven't found a way to use it in TradingView just yet. I'm still learning about it. And one of the things about ATR is it would be different for different country, for different companies or stocks. The 20% is the same for every single stock. It's just looking 20% drop, 20% drop. I can see for DeLorean, it dropped. The share price dropped probably 40 to 50% from the highs back in July. Anyway, now let's talk about selling or sell signals. Let's have a look at a couple companies. Why not? What I'm looking for when it comes to selling. Now, I haven't gone through all my charts because I'm quite busy right now, but this is definitely one. So Bell Financial Group, so I bought back in, I forget when, and actually the share price or the chart didn't look that bad. And so I put my little support level at about $1.24. But the share price has really done nothing over the past, say, 3 or 4 months. It was still in a little bit of an uptrend all the way up until about August. Got to a high of $1.50 back in July, and then it's pulled back on the results. Now, the share price fell below my support level briefly back in September. Went on a nice rally, and then it's come back. So share price is just hovering above my support level, which is my sell point. Now, the other thing to note here is the 20% is, so this company is not volatile. So that 20%, and the share price of Bell Financial has not even, sort of got just 20% from the high. That was very close to being a sell on the 9th of September. So it did fall 20% from the high of $1.50. But the one thing you'll notice is the 200 or 100-day moving average, it's now down. In fact, if I did have a look at this, I would say the share price of Bell Financial Group is moving into a downtrend. So I'm very close to selling this. I'm just seeing if it bounces here. And then if it does bounce, I might just take that and sell at that point. But this is sort of a chart where it's starting to turn a little bit more negative. And we've got a sell signal on one of my indices very close to the other two. Now, Southern Cross Electrical Engineering is in that same ballpark. This is the one where share price has dropped a little bit. Not a little bit, it's dropped a fair bit over the past month. This is a well-ordered, beautiful-looking chart. Share price has done nothing over the past 4 or 5 months. So I do have my stop loss, my support level at $1.59. My 20% stop is at about $1.55, and the share price has fallen below the 100-day moving average. So on that, indicator, we'll call it indicators. On that indicator, I have a sell, and the other two indicators near sell. So this is one I'm following quite closely. So unlike Light 360, Not following that at all. This one I'm following a little bit closely because it is giving me, or starting to give me, some sell signals. I did actually write down some the other day. What else am I close to selling? Oh, step one. This is another one. It's very close to selling. So I have taken profits in the past, but I maintained, I took profits way back here, and lo and behold, that was a sell signal in May. But the share price has been going sideways since then, and the share price it's below the 100-day moving average. Share price is now below the 20% drop, and the only thing it's above is my support level. So if the share price falls any further, this would be a sell for me, just based off my indicators. And that's how to use my indicators. Do I need 3 sells? Do I need the share price to be below all 3 indicators, or is it 2, or is it fluid? So I should have rules in place, so I don't have to think about it. I just go, oh, this is a sell, this is a sell, this is a maintain or hold, this could be a maintain or hold, maybe not good, this is maintain or hold, this is a sell. Anyway, so that's what I'm planning. In fact, I was going to do a whole video on this, and in fact, seems like I've already done a video on this. Anyway, so wait out for that video if you want more clarification, or if you want more clarification in that standalone video, this is the video to leave your thoughts, leave your comments. How do you want clarification when it comes to these 3 indicators and how I'm using them? Anyway, that's it for this video. Have a good day. Have a good weekend, what's left of it. And don't forget, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.